Hey guys, welcome to the Closing Beat. Happy Wednesday. How we doing out there? You having a good day? We're having a good day here too. Yeah. All in all, a good day. Had a customer come by, Mike, actually. Mike thought it'd be a good idea to bring by Oreos. Mike, thank you. No, I'm just kidding. He brought by the Oreos, but he also brought by what I will be sharing with our customers on our tomorrow's class there. So look forward to that. And we always welcome people by the way. If you're one of our customers, you want to come by and ride the go-kart? Old Mike was on the go-kart today. That's kind of funny to have a customer riding a go-kart up and down the street, but we had a good time. Anyways, this is a quick show that we do called the Closing Beat. And it's just real fun, just kind of hang out here, usually teach you something new. We're trying some different things maybe with this class here to see how do we make it more interesting or more fun to put together. What we're going to do today is actually take your questions first. If you happen to have questions, feel free to post them in there. Some of you have already picked up on my title of the class here today, or the show. Stock market has its last blah type day. And that's just because I kind of believe that this was the last blah day. If you look, actually I'll go back over here. You can see the Dow, I mean it was just whatever, S&P was whatever. It was kind of like, whatever. Even financial media focused on the impeachment and weird topics that they don't normally focus on. And it's just because there wasn't a lot to go, through today. So if you look at the S&P, back and forth sitting here at highs. Yesterday was almost a perfect bleh type day. Today a little bit better. We at least got a little bit of something there, even after hours, a slight up day. But, it's just all in all pretty quiet at highs. I say this is the last sort of blah day because we've got earnings coming up. The bulk of earnings really kicks off tomorrow. And so that pulls the attention away from whatever may be best served on maybe political type news channels. And we start to talk about earnings and growth and fundamentals and technical analysis and fun things that have to do with the market that people want to work on. So that really starts tomorrow. I've shared the list with you guys so you know what's coming up there. We've had a handful already report, but as we go into tomorrow and Friday, you've got the big banks, JP Morgan, Citigroup, Wells Fargo, Schwab, and all of those. And so that starts to really pull that attention away, and I look forward to it. So give us something else to talk about there. So I'll take a look real quick, see what questions we have, and then we will get into doing the other stuff there. If you guys have any questions. You prefer blah over elevator crashing. I like it. The old, the bulls take the stairs and the bears take the elevators. Got to be ready for that. Yep. You guarantee you won't be murdered down here in Florida. Hey, you hop on that go-kart, I'm telling you, you zipping in and out, you'll be fine, man. Dodging bullets, and we don't really have protesters down here, right, Cody? Yeah. Not too many protesters. It's a different vibe. You probably get the virus before you get shot, actually. Sadly, I get it. There's always the Florida man did this or that. It's what do you call it? It's fake news, right? That's all it is. No, it's a good time down here. Hey, let's just get started. Let's do this here today. If I missed your questions, save them there for the end. This is odd for me to have questions in the beginning. It was Cody's idea. It was a horrible idea. Here we go. So let's take a look at the Nasdaq. So you got the Nasdaq up, your biggest gainer here on the day, which doesn't say a whole lot. Apple was your biggest contributor. And what's interesting about this, Apple was the biggest contributor, and it only gained 1.6%. Did you happen to see Intel? Intel's in the Nasdaq. Intel, if you take a look at that one, it's has its largest gap in 20 years. We look back. It has its largest gap in 20 years, fourth largest gap ever, posts a 7% gain on the day, but yet Apple had more impact on the Nasdaq today than Intel did, even though it gained as much as it did. See, Apple makes up 12% of the Nasdaq 100, or the Nasdaq, if you're looking into that. You can use the ETF, the QQQ, if you want to take a look at that. In fact, even Amazon had a bigger impact on the Nasdaq today than Intel did, and Amazon only gained 1.4%. So kind of interesting there. Looking back to the Nasdaq, semiconductors started to drag a little bit, and that's okay. They had a great run. Semiconductors down a little bit. I'll cover that a little bit later, but that was your main drag in the Nasdaq. We go over to the S&P, mostly a ho-hum kind of day, I would continue to say, and blah is another word to say it there. One of the drags today was Nike. Well, there's a couple of semiconductors that sold off there, but Nike sold off a little bit because they were the latest company to say we are going to stop funding politicians that that objected to the certification of Joe Biden's Electoral College votes. Ugh, okay, so they were the latest to say that, and you have now Marriott, Dow, DuPont, Nike, UPS, ConocoPhillips, AT&T, Facebook. That's actually just to name a few. There's a whole list I could go through, which it is what it is, but to be fair, right? So Democrats, you're probably like, yeah, that's great. Republicans, you're like, oh, well, that sucks. Well, to be fair, I believe when Trump was elected in 2016, there were 11 Democrats, right? Was it 11? Do you know? You don't know? No, it was 11. I looked it up. So 11 Democrats actually objected to the certification of the Electoral College votes of then President-elect Donald Trump. So, you know what I mean? Like, I don't care what side you're on, but fair is fair. It just doesn't make any sense. That's what happens. People do object, and it's actually kind of a fascinating process if you ever get to watch it without, bad things happening. So we'll see, maybe next election. Anyways, that's what's going on there with Nike. So that was your biggest drag, one of your biggest drags in the S&P today. Like I said, semiconductors were kind of weak, so that one pulled things back. Also, Russell 2000, is it pulling back? I don't know. I can't tell you, but I can tell you today it pulled back. So this has been on an incredible tear here, by the way. It's still up about 7% year to date, so if you're enjoying that, that's awesome. It's up 10%. It's averaged 10% a month for the last 3 months. And if you look back for the whole year, including the virus drop, if you invested in the Russell 2000, 2.5% a month is what you'd be gaining over the last 1 year. So it gives you an idea of how impressive the rally is, and in particular, it's this second part of the rally. So there's a great example, too, of you have a nice recovery rally, a steady uptrend. Everybody's okay with that, right? Doesn't matter what it is. And now look at this second part. This is starting to go a little more vertical and get extended. This is how you know we're getting towards that exhausted period there. And so basically, that's all we have there. FinTips videos, you got, we did sell your rental property or should you use the rental income in retirement. So we're going to expand on that because I know that was sort of a raw video and I was kind of going through an example I had in my head. We're going to expand on that and do a couple different scenarios, right? For single people, a married couple, with money, without money, struggling, not struggling, estate planning and things like that. So we'll do those things. Today we did beneficiaries. You got to have your beneficiaries in your accounts if you're one of our customers. And along the way, I created an account for you. You got to go put the beneficiaries in there. Keep that in mind if you have 401ks and things like that. Hey, and then Friday, I'm going to give you all of the earnings on deck for next week, but we're going to go over the stats so you know which ones are most volatile, which ones have the biggest moves, things like that. I just have to check here real quick. Did you see what happened? So I don't share these stats with you so you can predict the future. And nobody's ever mentioned that. That's really cool that you guys kind of understand what this is for. But I share them with you because I want you to know what to expect if you happen to own some of these positions. And I don't know if you saw, but did you see KB Homes? I'm going to just share this here with you real quick and then we're going to move on. So if you look at KB Homes, where was the slide? Did I give that to you guys? Nope, that's not there. That's going to be right here. So I'll just kind of like make it sloppy here today, but there you go. So we've got up here, KB Homes. What did we learn from that? We learned that the stock tends to beat on earnings. They did. They don't do so well on revenue. They actually didn't. They missed revenue. That it tends to gap higher. What happened? It gapped higher. It tends to sell off during the day. What happened? It sold off during the day, right? It tends to be a non-event altogether. And ultimately, it's a little bit more volatile, but it's not the most volatile out of the list here. It does tend to be the most volatile out of the home builders. So those are the stats. If we go over here and we look, what happened today? It beat on earnings, missed on revenue, gapped higher, sold off during the day, and basically finished as a slight up day. It was like kind of a non-event. If you owned it, you were excited for a moment, scared for a little bit, happy you got a profit at the end of the day. So that's why I really share these stats with you, because stocks behave in the same way that they behave. People know these stats and they respond to them. The algorithms that everybody thinks is like mysterious and all that, they respond to the stats. They know the numbers. I'm just sharing them with you as a human. So something interesting to look at there. All right, what we're going to do here is go on to our watch list for the day. There you go. So watch list wise, we talk often about trending stocks. So, you know, we've had like Tesla. Okay, great. There's a great move there. All looks good. but you would say that's momentum. That stock clearly has an abundance of momentum to the upside. Well, most people look for momentum stocks on the upside, and I thought, well, you can find downside stocks as well, and you can actually look at them in two ways. So if you have a stock that's trending down, such as ConAgra, right? You've got a downtrend here overall, and then just recently it sold off a little bit. But you got a stock that's downtrending. You could look at it in two ways. One, to start scooping up little by little if you're going to be long or be a buyer or bull of the ConAgra for whatever reason. You could also look at it as looking for pullbacks to short if you're a shorter term trader or intermediate type trader there. So I put together a list of momentum stocks, however, downside momentum stocks, to see if you want to take a look at those. So if we got ConAgra, like I just mentioned, you got a downtrend here, not going anywhere anytime fast. Technical analysis, you basically got a break of a series of lower highs and a series of equal lows. So it broke down here in the short term, a little extended. However, you don't expect this to just rally back and all of a sudden it's a good play. So as a bull, you say, hey man, it was at 36, I can get it for around 32, maybe I'll scoop up a little bit and give them a long shot sort of idea here. That's one of them. We'll take a look at General Mills. I don't know what it is about the staples here, but you've got the same thing. I won't draw it again, but you got the downward pressure here of the momentum to the downside. It's clearly moving lower. And then in the short term here, it just kind of fell off of a cliff, breaking all kinds of support areas. So you could look at that in a number of ways. You want to buy it at 54 after basically getting a $12 to $13 discount off of highs. Maybe that's an idea. Maybe you like this consumer staples play. I can tell you the reason why they're out of favor at the moment is because growth is killing it, value is killing it, small cap value is killing it, small cap growth is killing it. You've got plenty of places to look, and so money is just, it's not foreverly abundant. So money is just out there going, why would I go with General Mills and pick on cereal when I could go with electric vehicles, lithium? I don't know if you've been watching that. You could see things like that. So money's just basically saying, I'm going to go elsewhere because things are going good right now. All right, moving on. A couple others here on the list. They're also on the right-hand side of your page there. Lockheed Martin in a trending downward move here. It's a little pricey. A lot of times you don't look for a stock to build a position on with the stock price being so high. But nonetheless, if you like that defensive type play, there you go. You got Hormel. I think I meant to put Hormel. It is Hormel. So back to the same food space there. That was my fault. I put HR. I meant to put HRL. So looking back here on Hormel, same thing. Downtrend, a little more accelerated to the downside. So I don't know that you'd be looking to say, I want to short this stock now. You might be looking more towards the long side if you're trying to build a position. Again, I don't know that this is the space or anything, just somewhere to look. Kellogg's just happened to be there as well, so I put that on the list for something to look at. Moving over to energy, you've got the same thing from WEC Energy. Also, it's Wisconsin Energy, but most people just say WEC Energy. Pull back off of highs here, and it's the same story. Momentum at the moment is to the downside. Do you want to be counter trend about it, or do you want to find opportunities to ride the momentum just as you would on the upside? Atmos Energy, these guys are fascinating. This is actually natural gas. They have pipelines. What would you call them? A distributor, natural gas distributor, essentially, for the last 120 years. Been around since like 1900. So really old company here. Unfortunately, right now, it's trending a little bit lower. They've seen this before. So same concept there, momentum plays. And so I just wanted to point those kind of things out to you. You know why? Another reason? Because maybe you feel like the markets are toppy and you want something that's already weak to pick on. That's an idea. So there you go. All right, stocks in the news here today. What do we got? I'm asking myself. All right, stocks in the news. You got Big Lots there. Big Lots said fourth quarter earnings going to actually come in well below forecasts. Hey, Wall Street, going to come in a little bit lower than we expected. Been a wild ride on Big Lots here today. It didn't affect them too bad. They think they're going to make about $2.50 a share versus $3 a share, which is around the estimate there that Wall Street had. We'll see. This is Alphabet, actually one of Alphabet's brands that we're on right now. YouTube actually says they are removing President Trump's channel for a minimum of 7 days. It's just, that was in the news. That was one of those days where it was kind of just focused on things like that. I mean, Oh, hope for earnings season here. Intel, talked about this a minute ago. Largest gap in the last 20 years, fourth largest gap ever. By the way, the size of this gap from here to here, about 12% on the start. When that happens, the average performance about a month later is down 7%. 9% 3 months later, 10% 6 months later. So large gap ups, which there were only 4 of them that beat this one. So it's not like it's a lot of data to use. But every time that happened, the average was down 7% in the next month, just to give you an idea. And we haven't crashed yet, so it's good, right? Yeah, buddy. All right, looking over here to Target. So you got Target in the news. They said holiday store sales up 17%. 17%. They're killing it there, looking good. Strong dividend, consistent dividend. They always raise their dividend. Or have always raised their dividend. So really strong there. And finally, we'll bring it up again, Zoom. Zoom raised some money because they could. $340 a share. They sold 5 million shares. That's their, no, they priced it at $340 a share. Whew. But they raised some money there. I would have done the same thing. Anybody take companies public, or anybody got a SPAC they'll let us go public through? I hear that's popular right now. Yep. We can take over the world. Chewy up 8% on the day. Yeah, it had a good day yesterday, by the way. Carrying over from that today, riding that sort of momentum, and looking, I mean, yeah, I have nothing negative to say there. You got an upgrade today, and I think you had a couple of them. I saw one this morning. $121 price target was the highest I saw today. It's currently trading at $112. Yep. Taiwan Semiconductors, yeah, they are doing really, really well. By the way, Taiwan Semiconductors, so where did I have that here? Hey, what happened to my notes, man? Taiwan Semiconductors are official, I mean, they're the largest holding inside the SMH, so it's kind of, you know, they're like Apple size when it comes to the Nasdaq. 14% of the SMH in here. What's interesting is Taiwan Semiconductors, there you go, at its current market cap, it is larger than every U.S. stock that's out there, but we have to take away Facebook, Apple, Microsoft, Google, looks like Amazon and Tesla. If you take those stocks out of the equation, the next stock up, Taiwan Semiconductors. You wouldn't think about that. And if you look on the Taiwanese stock exchange, they have got to be just ridiculous at this point. They're over 1/3. Over 1/3 of the entire Taiwan stock exchange is Taiwan Semiconductors. So just to give you some quick stats on that, that would make it the 7th largest stock on out of all U.S. stocks, just to give you an idea since we're talking about it. It's had a great run, I mean, no doubt, and obviously Apple has had a big piece of that, but that's one of those stocks when people say, what's a big momentum stock, large market cap and all that? Most people wouldn't think Taiwan Semiconductors. Now you know. Oh, I pressed the wrong button. Okay, sorry. What do you think of Bed Bath & Beyond? I love what they're doing there as far as how the whole turnaround story, if you will. It's gone well. I did a full overview of this, I believe on Monday, of the company. And obviously it's doing well. It's kind of taken off here in the short term. I have no problems with that stock if you own it. Yep. And I don't recall seeing if you said if you own it. Yep. Harry's got you. You got 5. There you go. Hey, he's following the rules. You set those targets now. When it gets there, it gets there. Oh boy. You think it's going to be $1 trillion in 2021? With the momentum that Tesla is on, you can't not see the math there, right? With the momentum that it's on, yes, it would easily be $1 trillion company at this pace. I don't think this pace continues, which I think is fine for longer term investors and probably fine for Elon Musk. Aren't we due about now for him to say the stock price is too much? Hasn't it been a while? Let's see. Let's go over here. Here is every time Elon Musk has said that he believes the stock price is too high. We've got October 24th, 13. Last time was May 1st, 2020. So actually, we have some time. He did it twice in 2017 and a little bit here. We've got a little bit of time, maybe mid-2021, you'll see. I also put the comment that he left or tweeted, and then I also put what the stock price did over the next 1 month here. And just for fun, we put that there. He thought the stock price was too high, it fell 10%. But we'll see. I don't know. Oh, you've been waiting for FANG. Finally had a down day there. Good stock. Yeah, good company, what they've been doing there. Just the one down day, though, right? I mean, that's just one. So let that and energy itself take a little bit of a break, right? Energy finally took a break today. It was not the leading sector. It pulled back a little. Give it a minute. Give it a minute. Let the rest of the week play out, man. Yeah. Yep. I like it. I like it. I like it. Well, I will wrap it up there. Talk your ears off here today. Hope you enjoyed our little thing today. Earnings tomorrow. You got Citigroup. You got JP Morgan. Well, you got the banks. We talked about this already. Don't need to talk about it again. Enjoy the rest of your day. Thanks for hanging out with me, and we'll see you tomorrow. We didn't crash. Getting better day by day.